All right. Well, welcome everybody. Next Legacy Group here. This is our second offering that we are bringing out to you guys. So this is a secured note program. And so I will get into more details as we get through the deck. But basically, this is a short-term promissory note backed against real estate that we own. It will provide monthly distributions and we will have annualized returns of anywhere between 6 and 12%. So we are really excited about this because at the end of the day, when we kind of came together as a group, our mission was always to be able to bring diversified opportunities to our investors. And so this really gets us in that direction. Our first offering was an equity offering in a multifamily property in St. Louis. And now we're moving to the next step, which is bringing this secured note program to offer another way to invest with the Next Legacy Group. So disclaimer, always disclaimer, anytime you invest, even when you put your money in a savings account, you always need to be aware that there is some risk from savings bonds all the way through hedge funds and crypto. There's always risk in investing. And so always make sure you do your due diligence anytime you are investing and making sure that when you do your investments, that you know what you're investing in and don't just frivolously throw your money away. So, want to touch base a little bit about the Next Legacy Group and who we are. So, Tim, Teresa, Laura, myself, and Justin make up the Next Legacy Group. The five of us each bring different assets to the group itself. Like I was saying before, our mission was to create real investment options that actually help our investors hit their goals on their own terms. And so, what does that mean? Equity, debt, potentially crypto, different opportunities that you guys can use to invest and really grow your portfolio. And that's our goal and that's our mission. So I do this slide really just to show a track record. So what do we have? What have we done in the past? As a group, we've had 21 acquisitions, 8 exits, currently run about 150 million assets under management. Between investments and assets under management, we have over 4,000 doors. We also have, with those 8 exits, a past performance. This is all equity based. This is on multifamily properties. We have an average hold of 27 months, a 2.4x equity multiple, and then a staggering 56% average IRR. And that's over those 8 deals. All of that is auditable and actually provable through data if you have any questions. But remember, past performance is not indicative of future results. So make sure, again, like the disclaimer before, you do your due diligence. So let's talk about the program. I love this program because it's really simple to understand. The program is basically a loan against one of our properties. So our properties will back up the loan. So that will be the secure part of the loan. And we will be offering anywhere between 6 and 12% return. We're asking for a 50K minimum investment and it returns on a monthly basis. So very simple. You invest in the fund, we issue the note, we secure the note against our own property. We then make the payments or your returns, and then it's paid to you monthly on the 15th. It's that simple. It is almost like a savings account with that's backed by real assets and a much, much, much better return that you would ever get in any savings account. And it also allows you to diversify yourself from equity to debt. So when you think about it, right, and you think about the folks, the ultra rich, like where does their money go? They do not put their money in the bank, getting 3% that is then taxed on top of that. And then you add in inflation. And in theory, right, you're probably losing money. In fact, you aren't probably, you are losing money. And then the stock market, some of us invest in it. I know I have, and I still do. And it is like today was, oh my God, amazing. 2 days ago, I was crying. So that whole sick good feeling, it's too much drama for me. And being able to switch my investing strategy into real assets has been a true game changer for me. So, kind of like this slide says, look, your savings account is losing money, stock market is volatile, and while we absolutely invest in real estate, it's a longer term approach, right? So, what we're bringing to you is more of a short term approach. This way, you can really kind of set yourself up for retirement where you have cash flow and long term appreciation based on those real assets. So, like I was saying before, the product here is very simple to understand. It is basically you're investing in a secure note, you're loaning money against our properties. So you have the asset itself that's backing up your dollar. And then we use that money to increase the value of the properties. Then we make returns back to you on a monthly basis, which are fantastic. So let's look at that. So we broke it out in a tiered approach. So basically, anywhere between 0 and 50,000, and we're really looking for probably a $50,000 minimum, but we can make exceptions. Will return a 6% annual return. An example of that, that's about $250 a month. This is straight cash flow on a monthly basis, regular. It's not like equity where if the property is doing well, you get distributions, and sometimes if there's issues with the property, your distributions kind of fluctuate a little bit. This is a straight payment every month in your bank account. The second tier is the 50 to 100. That's giving you an 8%. Gold 100 to 250, and then platinum 250 plus is where we'll give you the top tier of 12% return. 12% return is fantastic. I mean, it's about $2,500 a month of guaranteed cash flow. So, if you think about this, this is a great investment for those who want short term and cash flow, right? So your equity brings you a longer term, it gives you cash flow and then appreciation towards the end, but your money's kind of tied up here. Your money is tied up for a short period of time and giving you a significant, dependable cash flow option. So we built this really with our investors in mind, right? Like I said before, our mission was to really create real investment options to help our investors hit their goals on their terms, right? So it's being able to win if you're a high net worth individual, if you're a business owner, a retiree. You really want to diversify your portfolio, but diversify it in a way that it has real assets. I think a lot of us that join our calls and that we talk about, we're really so focused on real estate, real estate, real estate, and we're bringing that to you. So we brought an equity investment, and now we're bringing a debt investment, both of them backed by real estate. So, as the Next Legacy Group, if you've been on our previous calls, we always talk about operations is the most important part about running properties. It's making sure that you're operating the property so that you can get those returns for people. So, operators first, managers second, right? So, our goal is to continue to operate our properties at extremely high level so that we can have the equity, and in this case, have the loan against the equity and be able to deliver another diversified option for you guys to invest in. So to rewind, this is a debt option. It is a simple to understand but amazing product that will allow you to invest in the short term. So it's a 12-month secured note. So your money's tied up for 12 months, out of which will pay a straight 6, 8, 10, or 12% return on your money on a monthly basis. And then the really cool thing is because you're investing with us, we will potentially have more and more properties coming available that we'll be taking down. And so you'll actually be able to take your money and then switch it. Maybe a property comes up and that's available that you guys are like, oh, I want to invest in that. you'll actually be able to use the money that you have secured in the debt option to move that into the equity option. And so what we're continuing to do is allow for diversification and allow your money to continue to grow. And so you'll have short, long-term options that you'll always be able to utilize through the next legacy group. So, kind of in closing, again, our mission to really create real investment options to help our investors hit their goals on their terms by bringing new options out to them that allow for some sort of a diversification, whether it's long or short term, whether it's cash flow or appreciation to you guys. And with that, I'll pause for questions. Or if anyone else from the team would like to say anything in addition.
Just so I
Dave?
understand correctly, uh,
Mhm.
it's an annual commitment. Is it okay to take the funds out after the year?
Yes, sir.
Thank you.
And if you do have questions and you didn't think about them, you can schedule a call. This is my number. There's other team members on the call. They have their numbers up available. For more information, all of our first names at nextlegacy.net. Right there is mine. Just Patricia, Tim, Laura, Justin, any one of our first names at nextlegacy.net. That'll get you to any one of us. And then if you go to our Next Legacy portal, you can click on a couple things. You can see investments, you can see what we're all about. And then there's a QR code right there in the bottom right corner that will bring you directly into our investment tool, at which point you can pick the debt option.
Okay, thank you.
Yes. Any other questions, comments,
Question,
concerns?
Jason, how are you?
Hey, Tammy, how
It's
are you?
Tammy. Good to see you guys. I just wanted to find out what's the biggest risk that you would say with this? Um, what you guys are doing, and I missed the first part of it, so sorry if you kind of already would have
No,
answered
not at
some.
all, not at all.
Okay.
So it's a debt option. So it's backed against real estate. So real estate that we own. So the real estate has equity in the real estate. We're loaning against the real estate. So I think the biggest thing is your money's tied up for a year, but you're getting a straight return. That return is distributed out exactly the same each month. So you don't have the up and down you do potentially with equity. It's just a straight, hey, you're getting 12% on your money. If it's $100,000, you're going to consistently get that same exact cash flow every month for that period. And then after that period, you can stay with us and move your money into something else that we'll have available, or you can take your money out.
Okay. So when you say it's backed by is it backed by the properties that you guys invest in? Is that
It's the properties that we actually own. So we actually own these
oh,
properties. And each property has equity available in the property. So let's just
okay.
say the property has $100,000 of equity. We could loan 50,000 of that out.
Okay, and then like with the money that you guys would accumulate with this, would that be like for purchasing other projects and stuff like that? Is that what that's used for?
So the money could be used for that. Right now, it's going to be used for improvements and increasing the value of the other properties.
Okay, so then in order to get the people their money, is that coming through like rents that you guys already receive, or like how do you
Correct.
hear that
Yes.
is 6 to 12%?
Because yes, it's the rents that we receive. So we make money above and beyond, and we are able to dip in there. And we've basically figured out that we can support up to $4 million of additional loans and still be able to make those payments.
So basically, it would be just like covering the CapEx that needs to be done on the property,
Right.
which was going to be done anyway, except
Mhm.
we're loaning the money to the properties to do that, and then we're paying it back, basically just paying the loan back. And that payback is the return to your investment.
So instead of getting it from the bank, we're actually offering it to our investors. So we're keeping the money together, right? Instead of giving it to a
Yes, I love
random,
that.
random entity.
Yeah. So you
Instead
can
of
look at
loaning
it
it to
as
the
like
bank.
you can look
Right,
at it as like you're a private money lender, or you can look
right.
at it like we're offering opportunity for you to be our bank, essentially. Like Jason said, we're not taking this a loan out with the bank. We're offering this opportunity to our investors so they can make money and they can also help us out along the way.
Yeah. We're
This
trying to
is
keep it.
amazing.
Yeah, we're trying to keep us all together, right? We're trying to avoid using banks. Obviously, you have to, right? But it's kind of like Grant says, we're trying to insulate ourselves in our own community.
But you're also getting a much better return than you can get on any kind
Right.
of other just straight investment, such as a CD or savings account or anything like that. You're getting a
Right.
much better return on this.
So Jason, well, wait, may, hold on. something just went through my head and it just left again. Probably because I'm
I do
focusing
that
too
all the
many
time.
things.
Okay.
So
You're driving, so focus. Don't please
I,
focus.
I am focusing. So it's
Yeah.
good that it left my mind. I'll think of it. I can always ask Teresa.
Yeah, you can ask any one of us, Teresa, Tim, myself. Just
Okay.
reach out.
Okay, great. Thank you so much. And maybe it'll come back in if you decide to talk a little more.
I can keep going.
If you have a self-directed IRA that doesn't earn interest, right? If it's just sitting in the IRA account, this is a way to help diversify your portfolio.
Right. Well, I
And
had quite the experience with Vanguard, just trying to invest with Lucas. That was interesting because after 19 years letting it be in Vanguard, and it was after two wire transfers not completing, and I don't know, it was it was interesting. But
they do not
anyways,
want to let go of your money, right? It's weird. Is it
They
my
are
money or is
oh,
it
stingy with
Vanguard's
your
money?
money. Yes.
They are.
oh God,
They are.
yes. And now everything is in Wells Fargo, and I'm thinking, okay, I don't want this sitting there much longer. So, anyways, I do have
Well,
money that I want to do, so I will certainly be thinking of you guys.
that's awesome. And
Hmm.
just like in any one of our opportunities, we invest too. So we would invest. We are investing in this as well. So
Oh, that's good to know. Okay. Um, I know there was another question, so I'm just not thinking of it right now, though.
no worries.
Another thing too that I know several of you guys on the call tonight are investors with us already on the Haven or other projects, and um, this is a deal where once you get at least $50,000 deposited with us, which the ones that I saw at least on the call, you already have that 50,000 with us, so you're going to be able to just add incrementally at a $10,000 pop. So it's kind of nice
Right.
because then you can just stash away, an extra 10 here and there once you get it. And you're not trying to, wait till you get to 50. You can start getting that money working for you faster.
That's right. We do it cumulatively. So we had a $50,000 minimum, but some of you are already at that. So like Teresa said, you can do 10, 20, 30. Some
Jason, did
great
I see
questions.
somewhere where this is going to only go through about the end of next year? Is that what I saw?
So your question is whether this is going to go through the end of next year?
Well, I think what I saw in the deck is it was supposed to expire sometime in late 27.
Yes. So it's a 1 year. It'll well, it's 1 year rolling. So it's almost like an evergreen fund. So if you invested
Okay.
today, you're 1 year from today. But if Tammy does it in 3 months, she's 1 year from 3 months from now. So it's almost like an evergreen, ongoing opportunity for folks to invest.
I understand, but now my question is you're in it for a year. Do you get kicked out at the end of the year?
Not unless you want to be.
That's the way it looked to me on the slide deck. Not what you did, but when I looked on the website.
Gotcha.
Previously.
So
Okay.
we can update that.
You basically have to leave it in a year. You can't pull it out
Right.
before that, but
Okay.
after that year, you can.
It's
Right.
it's locked for a year, then it's
Yeah.
Right.
unlocked.
It's a 12-month minimum investment period.
I
After
just,
that, you can leave it in for longer if you'd like.
okay. That was my impression is it looked like there was an end to it. So,
For
We'll
you,
take
Grady,
we'll
we'll
take a
keep
look
it
at
the
that.
whole time. But
Yeah.
we'll update that, yeah.
Yeah, if there's something we need to adjust, we'll get that info and get it adjusted.
But thank you.
The only thing that could change during that time is if we find a property that we want to purchase with it, we'll give you the option at that point to either stay in the debt or convert it over into the equity for that
Right.
property.
I guess my question would be if you have enough money, would you just use debt from the fund to fund your acquisition?
Yes.
That's perfect.
Yep.
Mhm.
So Jason, when you guys say the 6 to 12%, um, do we, am I thinking that we just like go with the 6%? How does it fluctuate?
Sure. It fluctuates based on investment amount, and I don't know if you can see my screen, but we have basically 4 tiers. So tier one is up to 50,000, you get 6%. Between 50 and 100, you get 8%. Between 100 and 250, 10%. And then if you invest over 250, we'll give you 12% on your money.
Got it. Okay. That's very clear. Thanks.
And
No problem.
that rate, once you're in the tier, that doesn't fluctuate. It's a fixed rate.
Perfect.
Right.
Okay.
Right.
Good,
That's
good to
that.
know. Thank you.
Yep. It's a fixed rate. So that's that, dependable ongoing cash flow amount that you'll always get.
Okay, great. Thank you. I appreciate that.
So Jason, I have another question. So if our money that we have in there, since we're paid every month, can we leave that or do we have to wait for that to accumulate another 10,000 to put it in?
Um, you can leave it, but I believe we will have to, well, we can talk about it, but I think we have to wait till it hits the 10,000 because it would be very hard to start calculating multiple amounts. So it'll
Well,
most
that's
likely be every 10,000, yes.
okay.
But you
That's
can leave it in, so it goes into a savings account, which gets right around 2.25. So that it'll still gain some interest. And then once you hit 10,000, if you wanted to roll it back in, you can do that.
okay. Thanks.
So Teresa, you mentioned that you can add funds to this in $10,000 increments over time. Um, does each one of those $10,000 have to season for a year in the fund before it can be liquid again, or is that kind of rolled into your initial investment? How would that time frame work?
Hmm. That's a good question, Brandon. I think I need to do some research on how we would make that work.
I think it would be if you got your 50 in the equity deal and you put 10 in the debt, those are technically two separate investments. So it
Right.
would the 12-month minimum would apply to the 10
Right.
Sure.
from when you put that in, is the
Yeah,
way I look at it.
I was thinking more of a situation where, say, you had 50,000 in this debt fund and wanted to up that and put another 10,000 in. Would that 10,000 that you added have to season for 12 months
Yeah.
before you could move it somewhere else? I guess is the
Now that
question.
that we would have to
Yeah,
Makes the
run a
math tricky.
scenario.
Yeah.
it's a good question, Brandon. We'll check on it and get back to
Yep.
you.
Okay. And this is for accredited investors only, correct?
It is for accredited investors, but we might have some options if you just give us a call because you're already invested with us. So,
Awesome. Okay. Thanks, guys.
any other questions? This was great. All
I
right.
just wanted to say thank you to you guys and thanks Teresa for sending that out. And it's good to see you guys. Good to be back on here.
Yes. Yes, we
Good to
missed
Ditto,
see
you.
you.
Tammy.
Welcome.
Okay, bye-bye.
Well, If there's no more questions, I appreciate y'all jumping on. Thank you very much. We're very appreciative of all of you joining our calls. If you have questions, again, the information is right here on the slide. Multiple ways to get us. Please reach out to us and let us know if you have anything or if you have other people that are interested. We're always looking for other investors and other people to partner with. So again, thank you for joining. Hopefully everybody has a great, blessed Wednesday evening, and we'll hopefully talk to some of you on Friday night.
Thanks,
So
guys.
thank you, everybody.
Thank you guys. Appreciate it.